Let's move to the stock market. What factors are crucial to explain the dynamics of the stock market? Macroeconomic factors, economic indicators, the key rate and yield of the bond market. Of course, we must take into account the fundamental factors, accounting of the company and their perspectives. And I have said about the importance of estimation of the behavior of the institutional investors. I would like to pay any attention on the size of the assets of institutional investors. The assets have reached 140 trillion. And we cannot forget the sentiment of investors. Let's remember that there are two main drivers of the dynamic of the stock market: the fear and the greed. The movement of the stock market depends on what is the main at this moment, the fear or is the greed. And all these factors are crucial. It's very difficult to determine what is the main. You can see that the largest and the leading market is the US stock market. This is not surprising. Nowadays, the share of the US stock market is equal to 40%, the same as on the bond market. Then we can see next, after the USA, Chinese, European stock markets, the emerging market, stock market of other developing countries, and Japanese stock market. It's interesting that we could see the same structure in 1995, when the share of the US stock market was equal to 40%. Then we could see the stock market of other developed countries, Japanese stock market, emerging stock market, including Chinese market, and the UK stock market. But in 2005, we can see a decline of share of US stock market thanks to the growth of European stock market, which included Russian and Turkish stock market. By the way, now it's impossible. After crisis of 2008, the situation changed again. Low rates did their job. The US market has grown up and reached a next record. I would like to illustrate this point from the figure of the list of biggest on capitalization companies of the world. American companies have their share of 46% in the list of 500 the biggest companies in the world. We see the same picture if we look at the list of the most increased assets over the past year. All these assets, except Bitcoin, are US technology companies. It's interesting that the beginning of this year, the majority of analysts have seen problems at Apple, but the market didn't decline. We saw the new star of the US stock market, Nvidia, by using of artificial intellect. We can see from the chart that in period before crisis of 2008, emerging markets were growing faster than US market. Before crisis, many analysts have said about decoupling. This term was created by experts of the International Monetary Fund. They assumed that emerging market could feel better than developed market. Why? By simple reason, the crisis of 2008 was originated from problem of the USA economy. Emerging market should have been more stable in accordance to developed market. But this didn't happen. Furthermore, after 2011, we could see decoupling vice versa. Emerging market, stock market, began to lag behind the US stock market. But if we look at the economy of emerging market and the economy of developed countries, we have an opposite situation. The share of emerging market in the world economy has grown rapidly, and the share of developed countries had continued to decline. So we have disbalance in world financial market. The share of developed market in world capitalization does not match its role in world economy. Sooner or later, this contradiction will be overcome. Further, we will speak why economic trends and the dynamic of the stock market don't always match. And in more details, we will talk about the correlation between the stock and bond markets.